We have more questions and answers at the World Economic Forum's annual meeting. Will the global economy recover? Will it be a sustainable recovery? What will the next big challenges be? Will it be currency? Will it be inflation in emerging markets? Will it be sovereign debt? Well, I have three leading economists here to answer all of those questions. Nariman Behravesh, the chief economist of IHS Global Insight, Harvard economist Ken Rogoff, and Raghuram Rajan, a professor at Chicago Booth and advisor to India's Prime Minister. Gentlemen, thank you very much for joining me. Let me start by asking you what sense, or whether three of you are in agreement on whether we are really going to see a recovery in the second half of this year and how sustainable it's going to be.
I think there's no question that there will be a recovery. We can debate about how strong it will be. Our view is it's a two-speed world. You have the US and Europe in the slow lane, and most of the emerging markets, with the exception of emerging Europe, in the fast lane. Right. That state of affairs will last a year, maybe 2 years, and then it's a little more open, a little more uncertain about sort of where we go from here. But a recovery is already in place, and I think it's sustainable.
Professor Rogoff, do you agree with that, or is it going to get worse before it gets better?
Oh no, I think in terms of growth, it's going to get better. Employment is another question. I mean, I think employment could get worse, housing prices could get worse. There are a lot of difficult patches. But I mean, the thing you have to keep in mind is normally after a recession like this, we'd be zooming. And there are a lot of challenges. That's why we're not zooming. But it's not easy to get from where we are to really another recession right away.
Professor Rajan?
I agree. I think it's going to be a recovery that doesn't feel like a recovery. It's going to feel very painful. And that's where the problems are going to come from.
What do you think are some of the key challenges facing business leaders today? Because they're all here brainstorming on how they're going to get through the next 2 years. Will it be, for instance, the French president yesterday raised the issue of undervalued currencies, driving at China. President Obama has been talking about the fiscal deficit and how he wants to rein in spending over the next few years. What are likely to be the biggest challenges? Will it be fiscal deficit, inflation, currency, protectionism?
Well, for the U.S., clearly it is jobs. And with 10% unemployment possibly getting worse, I think the focus has to be on how to create jobs. Now, it's not clear there are very easy answers or any answers. You just have to wait for industry to pick up and actually do its thing. The problem, of course, is politicians can't have the patience or can't be seen to be doing nothing. Right. That's where the dangers come from. With China growing at 10%, there's a natural inclination to look outside and say, why are they growing while we're not growing? That's where the worry comes.
Are you worried about or concerned about the tightening that China has been doing and the impact that could have on a global recovery?
No, I think this is traditional in China. First, accelerate, and then because you don't have a steady mechanism of reining it in, put on the brakes, and stop it. But, corporations understand this. So many of them have actually borrowed a lot in order to tide over the investment going forward.
Professor Rogoff, were you pleased to hear President Obama's State of the Union address and what he hopes to do when it comes to spending cuts, or at least a spending freeze, and tackle the fiscal deficit problem?
Well, he's a wonderful speaker and he's a brilliant man, and so it's always interesting to hear his speeches. But there were patches of it that, I couldn't make sense of, especially the flexible spending freeze. What's he talking about? I mean, here's this president who's increased spending more than anything, and he should just say, I'm going to slow it down, I'm not going to keep it up. And a freeze is a terrible way to run a government, a 3-year flexible freeze. It's chaos.
So you don't think that he's doing enough to be able to deal with the fiscal deficit problem?
Honestly,
you want more detail?
We don't have a lot of bipartisan consensus on what to do. If you ask me a problem going ahead, yeah, unemployment's a problem, but over the longer term, the U.S. just is going to have a lot of trouble taxing itself the way it needs to. We've been borrowing, our debt's going up and up. It's been okay, but the day will come when the rest of the world, even American investors, balk, the interest rates go up. We're not good at tightening our belt. We're good at expanding our belt, and I'm not sure what's going to happen.
So what do you think American politics will do to this entire conversation around exit strategies, and therefore the implications that it will have even on countries like India, which have been talking decoupling for a while now, but really haven't truly decoupled?
Well, I think the toughest piece of U.S. policy is Fed policy, the central bank, these zero interest rates. Asia does not need zero interest rates, and obviously particularly China, the way it's pegging to the dollar, but other Asian currencies sort of controlling their fluctuation of the dollar. That's a real issue for Asia going forward. How are we going to separate our monetary policies more than we have in a long time?
Mr. Parrish, do you think that by the end of this year we'll see the US move away from the zero interest rate policy?
I think our best guess is the Fed will probably raise rates somewhere at the end of the year. Maybe in the late autumn, early sort of part of the winter. Before then, they're not worried about inflation. They are worried about growth. They're worried about the unemployment picture. And so they're not going to be in any rush. It's a very different story when you look at other parts of the world. India, China will be raising rates a lot sooner because they're growing faster. So I think it's, again, we get back to this sort of two-speed world where the slow lane, central banks aren't going to be in any rush to raise rates. The fast lane, you will see interest rate increases quite early in the year.
I'm just not so sure the financial system could take it anytime soon. I mean, that's going to be a really delicate moment.
Fair enough.
If we're talking about having a double dip, the Fed deciding just it can't keep, it got impatient and wanted to raise rates, would be a real problem.
What's it going to do to liquidity, Professor Arjun? Because stock markets, for instance, in India have been riding out a liquidity boom all of last year.
Well, I guess that's part of the question, right? Because the low interest rates have been pushing money out into all the emerging markets. And once people get the sense that interest rates are going to start coming back to reasonable levels, there's going to be a lot of money possibly finding its way back. What effect that has on asset prices? Typically, when you sense that a regime shift is happening, it does cause discrete changes in asset prices. It's not a continuous movement. Whether that happens, how much that happens, that's certainly a worry that people who hold some of these assets have to be thinking about.
So how decoupled do you think emerging markets like India will truly prove to be in the course of the next 2 years or 3 years? I mean, here the Indian contingent is celebrating the fact that we're talking 7 to 8% growth, whether we do 7.5, 7.75. But do you think that if America does go through a double dip, we will be able to achieve those growth rates?
I think India is decoupled in many ways. There are certain sources of coupling. For example, risk capital comes from industrial countries. That's going to affect investment in India if it seizes up once again, as it seized up in September of 2008. But I think otherwise, India is a little different from some other emerging markets in the sense there's a lot of autonomous demand, and that can be serviced. So it may mean a percentage point or two of growth, but it will still mean fairly healthy levels of growth. The bigger question to my mind lies with some of the smaller export-led emerging markets, whether they can substitute by exporting to other emerging markets for the industrial country markets that they will surely not see grow at the same pace they've been used to in the past.
You advised the Indian Prime Minister. So what are you telling him to be prepared for over the course of the next 2 years?
I think at this point, steady as it goes. There is a process of withdrawal of stimulus. India has a huge fiscal deficit, which it needs to focus on.
Right.
I think measures to rein it down in the budget, and also all the reforms that have been postponed because of quote-unquote coalition politics. It's high time that they were actually done. There are bills before Parliament which should be passed. I think there are a list of things which ought to have been done yesterday, which still aren't being done.
There's a monetary policy announcement on Friday. Do you think that it's a good time to start raising rates or reining in liquidity in India?
I think for sure something will be tightened. Whether it's rates or liquidity, it's not clear. But I think that a tightening process is clearly has to start.
Okay, so let me ask you for wrap comments then. Mr. Parrish, what are you telling your clients? How do they prepare for the next 2 years? What should they do? Should they start working on growth and expansion strategies, or just bunker down right now?
Well, it's a very different answer depending on where you are in the world.
Okay.
Again, in the developed world, it's more of a market share game rather than a growth strategy, whereas in the emerging market, it's a growth strategy. So very different answer depending on where you are in the world.
Okay, so if you were in the developed markets, because we know, we know the developing markets are sort of doing a pretty good pace of growth, what would you be telling them?
Again, in the developed markets, it's sluggish growth. It's a very competitive environment. So there, it's a sort of a keep your costs down, competitiveness up, productivity up. Those are key elements of succeeding in the developed markets. Again, in the emerging markets, India, China, elsewhere, then you've got a lot more room to maneuver in terms of the growth.
Professor Rogoff, 3 things that you want to list as the biggest challenges for the next few years?
Well, I think reining in the deficits, because the government's guaranteed everything. They spent like crazy. How do we rein it in? Banking regulation, I have no idea what's coming, but the sooner it is, the better. And then finally, we've talked about...
Do you like what you see? Sorry to interrupt you, but...
I don't know what I see. You know, we've had a change with President Obama's speech. It's good, but I don't know what I see. And then we talked about monetary policy. That's a tough call.
Okay. Last comment, Professor Rajan.
Well, I think this is going to be a challenging year. So I think certainly the advice across the board, you said the Indian contingent is euphoric. I'd say you have to be a little cautious over what happens over the year. And I think even if you're growing strongly, we have to see this policy uncertainty, this economic uncertainty. I think keep the powder dry, don't spend all your cash, sit on a little bit, and see what happens.
All right, gentlemen, thank you so much for your time.